Hello, my name is Luan Artiga, and this is my Kohl's Corporation financial analysis. This is for Accounting 370. Kohl's Corp is an omni-channel retailer that provides a variety of products for its consumers, ranging from clothing to jewelry to home goods. Kohl's is in the retail industry, where it provides its customer the option to shop in-store in one of its 1,100 stores or online and ship directly to them. Targeting families, Kohl's looks to provide quality products at lower prices. Its major competitors include Macy's, Nordstrom, TJ Maxx, and Amazon. Kohl's generates a majority of its income through the sale of merchandise online and in retail stores. Its other forms of income include credit card sales, website advertisements, and unused gift cards and other small revenues. Kohl's Corp has been experiencing a decline in net sales the past few years. Despite the international pandemic, which is mentioned in the annual report, Kohl's Corp still shows declining sales trends. The following slide shows the income statement for the past 3 years. The past 3 years show a decline in sales. The 2020 fiscal year shows significant decline, but part of that is due to pandemic closing most of the stores. Cash flow trends and operating activities. The operating section of cash flows also shows declining trends. Based on SEC filings, the past 3 years, net cash from operating activities have been decreasing in value. Decreases in sales led to a lower operating cash flow. The following slide shows a decline in net operating cash with a significant decrease in 2021 due to the COVID-19 pandemic. Cash flow trends in the investing activities. Investing activities showed an increase in spending from 2019 to 2020 due to the development of e-commerce fulfillment centers, new store improvements, and technological developments. The most recent year shows a decrease in finance activities caused by a limit on capital expenditures due to the pandemic, as well as the sale of real estate. The following slide shows the investing activities. Cash flow trends for financing activities. Net cash for financing activities show an increasing trend over the past 3 years. 2019 to 2020 shows an increase in treasury stock restock purchases, but a decrease in the reduction of long-term borrowing. The following year, there was an issuance of bonds that helped increase cash provided by financing activities. There was also a reduction in the repurchase of treasury stocks. Ratio analysis. Liquidity. Liquidity refers to the company's short-term ability to generate cash to repay working capital needs and immediate debt repayment needs. Revzine 2021. Based on research between Kohl's, Macy's, and TJ Maxx 10K reports, Kohl's shows more liquidity than its major competitors, and it sits slightly below the industry average. Kohl's has had higher current and quick ratios than the selected competitors, Macy's and TJ Maxx, meaning it is able to repay its short-term debt better than its competitors. The following slide right here shows the liquidity ratios based on the research. Ratio analysis, solvency, and leverage. Solvency refers to the long-term ability to generate cash to satisfy plant capacity needs, fuel growth, and repay debt when due. Revzine 2021. Compared to competitors TJ Maxx and Macy's, Kohl's has a better DTA ratio than TJ Maxx, but not Macy's. This means Kohl's has more financial flexibility than TJ Maxx, but not Macy's. Kohl's DTA ratio is also lower than the industry average. Kohl's also has a lower DTE ratio than its competitors and the industry average. You can see the total debt to total asset ratio here and the debt to equity ratios here based on 10K filings. Efficiency. Efficiency is the ability to underprice the competition, achieve high sales, and still make a profit on each sale. Revzine 2021. Kohl's has kept a steady inventory turnover ratio over the past 3 years. Compared to its selected competitors, it has a higher inventory turnover, but is lower than the industry average. Kohl's has the lower asset turnovers than its competitors Macy's and TJ Maxx, and it is much lower than the industry average. Lower asset turnover average indicates Kohl's does not use its assets efficiently. Over here you can see the efficiency ratios: inventory turnover, fixed asset turnover, and total asset turnover. Profitability. Based off of the historical trends of Kohl's Corp, they've had steady decreases in different profitability ratios. Compared to Macy's, their profitability ratios are lower in all three categories, but higher than TJ Maxx. They have a lower GPM than the industry average and return on stockholder equity. Over here you can see the profitability ratios and trends. Market value. Kohl's Corp has no current unrecorded assets. Kohl's Corp current market valuation is trading at 50.42 on the New York Stock Exchange, and this graph is based off of Yahoo Finance. Market value has shown an upwards rise over the past year and capped out in April, which is the highest you'll see on the graph right here, but has been on a steady decline. Its current market cap is at 7.77 billion US dollars from Google Finance. Strengths. Some of the advantages that Kohl's has is it has the advantage of being a big name brand housing name, and it provides brand styles and private styles at competitive prices. It has a large number of stores and employees, and has good liquidity ratios, and it's able to cover its short-term debt. It does also have the ability to cover long-term debt better than the industry average, giving it more financial flexibility. Weaknesses. Some of the weaknesses for Kohl's Corporation is its declining revenues over the past 3 years. Its income has also been decreasing, with a sharp decrease this year due to the COVID-19 pandemic. Kohl's has had to issue more bonds to help financing activities due to the pandemic. Future prospects. Based off Kohl's financial statements and industry averages, Kohl's seems to be still on the decline, with revenues and appearing to be hemorrhaging money. The issuance of bonds shows that Kohl's Corp needed more funds to help their financing activities, as they are trying to cover the effects of the COVID-19 pandemic. Kohl's is showing regression trends, with lower net sales for each year and decreasing stock repurchases to counter the effect of the pandemic. I've projected that Kohl's is to show continued revenue loss as they recover from the COVID-19 pandemic. Biblical integration. Kohl's Corp is experiencing a hardship with a decline in sales and is feeling the full effect of the pandemic. COVID-19 has accelerated the decline in the overall network of the company. Romans 5:3-5 states, "More than that, we rejoice in our sufferings, knowing that suffering produces endurance, and endurance produces character, and character produces hope, and hope does not put us to shame, because God's love has been poured into our hearts through the Holy Spirit who has been given to us." Going through hardship is a part of life. However, dealing with the hardships and walking in the path of God helps build endurance. Kohl's is in the rough right now with their financial position, but with restructuring their debt and new focuses on marketing to help improve their sales, Kohl's can work through the rest of the pandemic and hope to bounce back from their negative revenue trends. These following slides are the references I've used for the research. And that is it. Thank you.